Good morning, everyone, and welcome to the European crossover webinar. And we have seen the euro going to move down to the 1128 level. We've done the basic technical yesterday and during the Asian session, and we're talking about this moving down here. This is the last key critical level. Think about it. Mentioned that there is on the basic technical that there is a area. There's 1079, which is kind of like a minor. And then on the way down to all the way down to 110. So this is key right here, this 1128. So we've made that move down here, and correspondingly, the dollar has also made its move. You can see here, but we're just above or just right before this key 97.89 here. And I mentioned on that from there, we're just a bit away from the outright highs, 98.37, and it's kind of, we could really start to launch, and you have to wonder, is tomorrow they're really baking in a lot into the cake as far as the ECB, and we're seeing new all-time highs again. It's needless to say, but we'll move to that. A new day and new all-time highs in the bunds, i.e. all-time lows in bund yields, and PMIs were the worst in 7 years in Germany. So once again, like I said, the euro is really the piss poor zone as far as the economy, and continues to just weaken. Looks like it's just gonna fall into something worse than a recession at this point. Going to move in here to back to the main screen. Cable actually, holding up, despite being so low, holding up somewhat better. I guess you could tell, relatively speaking, considering with the euro, which continues to just move lower and lower with each day. Although this is a key area, the 1128, that we had focused on, and I think we'd get at least a little bit of a bounce, or really what we'd see some short covering from this area here with the euro. Dollar yen has even rotated a little bit lower here. Had been inching up just a little bit, and the peso, which was really on its highs when we were looking at it in Asia for the basic technical, is kind of weakened a little bit. Really, with the peso, it's all about the 1923 area. If we can get above that, now that would change everything completely. And I was putting in the basic technical, would send this market up to, we'll be eyeing 1943 here with the peso. Dollar CAD continues to remain in this area here. Here's that, remember that 3142 area here on the way right back up here. A pause, and then we said, hey, look for the market to go in and look to, let's say consolidate, but look for some short covering as we dip if you were a scalper. Now, we mentioned that we were saying any pullbacks to 3120 would be that you find the bids, and sure enough, we found the bids at 3122, kind of pop back from that upper area. And we can look at the cross rates. And the euro yen has moved to new outright lows again. It's just really, really just terrible thing. Like I said, we when we did the analysis on the breaking through this area and looking for lower lows and lower lows is just exactly what it's gone to. It's just, although that's not saying much. I mean, it's like every day the euro is going to make another new low. But as I said, the euro is coming off those lows from the 1128. Now we're currently at 1142. But really, it's just short covering. That's all it is, just short covering. And even a little bit of dip here with the euro kiwi. Gold continues to work up a little bit higher. And go and take a look here. while rotating lower. And I mentioned this because we'd had these two back-to-back gray stone Jojis on Friday and Monday. You can see this thing rotating back lower here. And on the morning bid, as Boris Johnson enters 10 Downing Street today, Britain's official policy on Brexit becomes leaving the EU by October 31st, do or die. Whether Johnson follows through on that promise with his implicit suggestion of potentially grievous national ham will be the stuff of coming few months as he takes on unconvinced Parliament and unimpressed EU counterparts after a knockabout speech yesterday with convoluted dude acronym setting out his four-man objectives. Johnson will go down to business this evening with his first proper address as PM and the key appointments of a cabinet that he could either be a very short-lived or make one of the most momentous steps in Britain's recent history. Italian Deputy Prime Minister Matteo Salvini, leader of the Right League, is due to address in Parliament allegations his party sought funds via an illicit oil deal with Russia. World stock markets are fairly buoyant given the decent early soundings from earnings, the imminent wave of central bank easing, and some glimmers of hope on reward renewed U.S.-China trade talks. Wall Street pushed back up towards the record highs overnight as Texas Instruments gave another shot in the arm to the upbeat sector, and Facebook, Tesla, and Caterpillar were due to report later. The main indexes stayed shy of new milestones, however, and Asia's bourses are mostly higher too, helped by reports U.S. Trade Representative Litzinger is headed to Beijing next week. The euro's marked weakening ahead of tomorrow's ECB meeting and chance of a further easing as soon as this week was the most eye-catching mover of the currency markets, with euro-dollar dipping to its lowest since May, first thing before finding its feet. The ripple effects of another round of ECB easing are also being felt around the edges of the Eurozone too, with the Swiss National Bank expected to face a conundrum of matching any ECB easing or having to intervene to rein in the soaring Swiss franc, which powered to another two-year high against the euro on Tuesday before steadying this morning. Within futures markets now appearing to sell on a quarter-point U.S. interest rate cut from the Federal Reserve, futures markets expectations of a larger 50 basis point move up further down to a 17% chance. The dollar and the treasury yields mostly gains from the recent session, with the cash dollar index touched its highest in more than a month overnight before edging back. The big reality check from the macro data world today would come from the flash July business survey readings from around the globe. Japan's composite reading rose to 51.2 from 50.8. Back in Europe, the ECB holds all in thrall, but a heavy earnings season late years is to be watched closely as aggregate expectations of Q2 profits have slipped into negative territory again before marginally positive equivalent stateside. Well, I'm not really interested in reading anything about Germany or the EU because, like I said, it's going down the tubes. The European corporate front banks were back in focus. Let's go and move on to the PMI. Speaking of in the tubes, Germany manufacturing recession deepens to the weakest in 7 years. A recession in Germany's manufacturing sector worsened in July, with the performance of goods producers producing to the lowest level, dropping to the lowest level in 7 years, a survey showed on Wednesday. Marcus Flash Composite Purchasing Managers Index, which tracks the manufacturing service sectors that together account for more than two-thirds of the economy, fell to 51.4 from 52.6. The undershot analysis consensus forecast of 52.3 was the lowest reading since March. The drop was driven by a decline in manufacturing sub-index, which fell to 43 from 45. The health of German manufacturing went from bad to worse in July, said Phil Smith, principal economist at IHS. The automobile industry is the business sector which is under pressure the most. He blamed the trade disputes, Brexit, and falling demand for abroad for German cars, as well as other industrial products. The contagion of the manufacturing crisis to other sectors of the economy so far had remained limited. However, Germany's solid labor market and robust household spending will provide a buffer against external shocks. And lastly, the euro plumps to two-month lows ahead of the ECB. Pound under pressure. The euro slipped to a two-month low on Wednesday as markets waited to gauge the European Central Bank's stance on policy and bubbling expectations that it could eventually lower interest rates and join the global easing trend. Global easing trend, this has been at the forefront of the easing trend. I'm not sure what they're talking about there. The euro's decline has quickened ahead of the ECB's policy meeting on Thursday. While markets have paired their bets, the central bank would cut rates by 10 basis points. They still expect a dovish guidance, paving the way for easing in September. Attempts within the currency market to price its dovish moves or language by the ECB have gathered pace over the last few days, said Yukio Ishizuki. The key point is not necessarily whether the ECB eases this week or not, but what kind of language Draghi employs regarding the policy direction. The euro is also seen weighed down by as the pound slumped towards a two-year low after Boris Johnson on Tuesday won the contest to be the next British Prime Minister. Sterling was a touch lower, 24.33 for its fourth straight day of losses. The dollar hovered near a one-week high of 108.29 with yen. Trade Representative Liz Singer and senior U.S. officials will travel to Shanghai on Monday for face-to-face meetings with Chinese officials. The greenback also firmed out after Washington on Tuesday reached a deal to limit the government borrowing limits. In addition to the euro's weakness ahead of the ECB meeting, the dollar is supported as the market participants continue to discount the likelihood of Fed cutting rates by 50 basis points. Speculation that the Federal Reserve would cut lower rates by 50 basis points at the July 31st meeting had increased early this month following the comments for some senior Fed officials, but investors now see a shallower 25 basis points. And along the Aussie dollar, after Westpac brought forward its timing of its forecast for the next rate cut, the RBA to October from November previously. Okay, well, we've fallen even further, and now we've made it down here to the lows down here 28. This is just I don't even call it make a break. You know, the euro is going to continue to move lower. Um, but we did say in the basic technical, and you can see right here, and we're just barely kind of seeing a little bit of short covering off of this area here, 1128, and that'll be the support level. Resistance is now 1180, so which was support now is resistance now, and as I mentioned, with each day there's a new all-time lows in bond yields, and that just continues. We just keep marching lower here with the bond yields. We'll move on to the cable. We're just hanging on right here by a thread here, 2406. Had 2408, moved to 6. So right now that'd be resistance here, 2497. If we got some kind of a pop in here. Let's go into the Aussie dollar. The Aussie dollar garnered a little bit more of a slip in Asia. China was stating that they're not looking to follow suit if the Fed cuts. So that kind of gave a little bit more of a little bit extra push down here with the Aussie dollar, and get an idea how much further we can slide here. Comes in right there at 69, 66. Not too much low from where we're at, but it'll be down here to 69, 66. And resistance will be right there at 70, 16. Kiwi's coming right into this support here, 66.91. We'll go and stay right here with the 66.91. Actually, Dad did down there, just let it slide. The stop. So, no, I think it is. But this is a good level. I mean, as far as the daily, it's key for them to close above it if we want to give it a little bit of a 85. Looking on, I guess, on the intraday chart. And there's our 85. We're going to keep the 85 then. 66.91 is important though for it to close or stay above. And be right here at 67.36. And the dollar CAD, we talked about that and in the chat room about this key level here. Look at it on the 2-hour chart, the 31.62. We saw the market ease back, but we were talking about that we were looking to go in and find bids at 31.20. Now, from a scalp standpoint, we mentioned the dip down 31.42. The market kind of held. Eventually, we did make that dip down, and we're talking about bids to be found at 31.20. The low was 31.22, but we said this market is open to move higher here. And the next key resistance, although obviously we got here at 62, but at least I guess for now, we'll keep this as 62 just as our buy chart. I think there's a potential for this to move up to 31.90 potentially, but for right now, we'll mention 31.62 as its resistance. and support will be that 3120. Now we did see the pace of, start to garner a little bit of upside momentum, um, but the real resistance, and you can see that on the daily, is the 1923.6. We had 1915 that kind of held the market initially yesterday, and we kind of pushed beyond that, but we fell short of this 1920. But it's all about the 1923.6 where the real resistance is, and now that we've got some upside momentum, we'll mark that off here. And support will come in at 1908. For the dollar yen, you can see we were inching along in here. I mentioned inching along the Asian session. Um, but you have to go and take a look at it here on the 2-hour chart. And I mentioned here the key resistance gap is 850 and the potential for this market to move higher in line with the dollar, but it's actually diverging. You would think here's the dollar moving to its best levels in some time. I mean, since almost May, and we're over here just kind of rotating lower. So certainly, like I said, once again, as we mentioned about a couple of weeks ago, it's almost as if the dollar yen or the yen itself is a canary in the coal mine, suggesting we could see some things in the short term that are concerning, and the market certainly will seeing these moves towards some safe haven bids. Um, so the resistance, although 850 is the key up in here, but still for the short haul, it's going to be this 830, 833 in the short haul. So no change there. The only difference is in we did in the Asian session when we did the basic technical, did move this up to 778. For right now, the key level is this big 97.89, and that goes way back here on the daily. You can see here, that's a very key major level, 97.89. But as I mentioned, the basic technical, we're just very close from there of ticking up and taking out these highs at the 37. So, but for right now, it's 97.89. That's going to be key for now. I mean, considering that the euro has already come down to 11.28, and the support there is going to come in right there. We call it 97. I want to go with 97.36 looking at the 2 hour. Right there, 97.36. Giving it a little bit of extra room. We'd probably almost go with this 45 right now at this point, but that's not that far away. And do see a bit of a pullback. So we'll go with 97.36. And this market certainly acts like it wants to push high. If we takes out these levels, this thing is just going to take off. I mean, nobody want to stay in the way of it or stand in the way of it. Could see a situation where the Fed cuts 25 basis points and the dollar rallies. With that, we're going to move into the cross rates. Looking at the Kiwi yen from a couple of days ago, a very, very nice looking and gravestone doji after look how many days that 1, 2, 3, 4, 5, 6, 7, 8, 9, 8 out of 9, 8 out of 9 days it was making new highs. A nice gravestone doji, a decent pullback, and initial support comes in right there, 72.25. And let's look at resistance. Right there, 72.68. Well, it looks like we're going towards this 88% retracement here, which is 1984, and with the ECB tomorrow, certainly looks easily doable. So that's going to be our bias chart support here is 1984. So that just ahead, resistance will be right there, 2060. And with that, we're going to the euro line. We're starting to see a little bit. You can see after these 3 doji days, market kind of just starting finally start to turn things around a little bit. When we look at it on the 2-hour chart, talked about this in the Asian session with the basic technical. We actually generated buy signal here. The market hasn't moved too much higher. We've actually come right here into some resistance. 59.62. Trying to see if we can get a little bit more momentum. We did quickly get back, obviously with the euro being so weak. So we'll keep the tide just move it up just a bit higher right there to be 59.66. And support will be right there, 59.26. Let's go to the euro kiwi. Let's try to find a little bit of upside here. Obviously, once again, a euro byproduct, so just, of course, nothing but down. Um, but we've kind of carved out just a little bit of support here with the kiwi pairing back. So our support right now is going to be the 6604. And on the upside, that resistance, we get a little bit of a move higher. It's going to be this 6683. You can see here where we had these two back-to-back gravestone dojis and just a little bit of a dip and now some more follow through. As I mentioned, China did mention in the Asian session that if the U.S. were to cut, they didn't look to follow suit. They're comfortable with their policy, and that's what they said, comfortable with their policy where it's at. That weighed on the Aussie and and we've got some support coming here at 75.32. On the upside, resistance comes in right there, 75.90. That might even be a stretch, so it's at best here. Call it 75.81. And to go with the guppy, and we did go on and find the support coming in right there at 34.25, right here. And on the upside, it's still going to be 35.01 here. So it's kind of holding its own right here, basically holding its own, something I guess we see a lot more compared to with the euro. And we're finally turning things around a little bit here with the Australian, the starting versus the Aussie made a run here. Support now, it's going to be right there at 76, 77.68. Still continuing much higher, and you've got 78.86. Yeah, that'll come in right there, 78.86, which is also the 61%. There we go. 78.86 on the upside. We'll move into the main screen. Before we did that, I wanted to go in and take a look at what we have for the data. We do have PMI, market flash PMI here in the States. And new home sales at 10 a.m. Eastern. Tomorrow we have German unemployment. And obviously the ECB will be the big market. We did have, as we mentioned, the flash PMIs, which, except for Germany, were nothing short of abysmal. And Eurozone market flash PMI was also on the weak side. As I mentioned here, we've come down to 1128. If you look further out, right here, we've got 1079 coming to the right there, 1079. And really then after that is just 110. So once again, 1128, we've hit that 1128, and then below that is going to be 1079 right there for the euro. Obviously, the cash dollar index just a bit away from major resistance level, 97.89. It certainly looks like it wants to do it, and dollar CAD still with the potential to move higher here after that complete reversal of the reversal from Friday. So certainly the potential to move higher. This is where we've got the bias chart. I'll go and get that posted. Thanks for joining us here on the European Crossover day before tomorrow's ECB